Good evening, traders. This is a trading analysis for 19th of August 2022. First, we'll have a look at what happened today and how today's moves were traded. Today was a very good expiry, both from a long and a short perspective, and I managed to close in green and also guided all my Telegram members. The link to the channel is given in the description below on how these moves could have been played out. We were discussing that the largest positions in case of Bank Nifty, for example, let's have a look at the Bank Nifty chart. The largest shorts were present between 37,500 and 37,540. Once these shorts started exiting, once we broke through this level, this is the update I shared, we started to move up. Even order flow showed a lot of aggressive buying by large players. So, and I was rather expecting this zone to break. I was also in a live trading session where I explained to the participants about how I'm expecting this area to be broken by sellers. And one of the key reasons that I look is, first thing is to identify areas like this. This is a volume analytics generated level that I use using my proprietary methods. And right when we started breaking it and pulling back, I could see that on the ask side there were a couple of large imbalances, and a large lot trader had entered into the market at that point of time, someone who trades large quantities, and we essentially should not go against them. And then in a subsequent few minutes we started giving a breakout, and the day high got broken. You can see how once 37,540 area was broken, the volumes picked up, the aggression by shown by the buyers had also picked up, and it was a very good thing to see, especially from a and this area helped a lot, especially for option buyers. If you did, that is exactly how these kind of reversal moves can be picked. The first thing to understand on how to identify reversals, or how exactly to pick such moves, is to, one, know the most important areas on chart from an institutional buying and selling perspective. And the second point is to read the tape, which is order flow in this case, and see how what kind of buying and selling is happening in live markets at that area. Now, moving on to the trading plan for tomorrow. As I said in a couple of videos previously, and I'm maintaining my stance that the play which is happening, most of it, the strong up move that we are seeing a lot of traders telling that RSI is overheated and RSI is greater than 70, greater than 80, and all and all. Let's talk about RSI in a couple of minutes. So what's happening is that this play is happening on a higher time frame, which is higher time frame implies a greater than intraday time frame. You can see that most of the moves are being capitalized in the gaps itself. The pullbacks are rather shallow at every point, and there, since we closed at highs, there is also a good chance that we can again open with a gap up tomorrow. So in such cases, as intraday traders, it becomes a bit difficult for you to trade, because once we have a rather a large gap up, then at least the initial 30 minutes to 1 hour, or the first half of the session becomes rather silent and muted, with buyers not letting up, and of course sellers will not be aggressive at higher levels right at open itself. So in such cases, all we can do is patiently wait for our levels and trade. So if any of you have missed a part of this up move, that's completely fine, that's completely natural. As intraday traders, we have to capture what we see during the day, but not think about what's happening on a higher time frame, and what kind of moves is a higher time frame giving, because we can't keep switching time frames based on the market context, and we have to stick to one style of trading. Right now, the reference area I see, the next reference area I see is 18,120 to 18,150 levels. Again, this is on a higher time frame. Between 18,150, 120 to 17,920, 955, there are no valid references. To the downside, the largest buyers of today are present between 17,920 and 955. As long as these buyers hold, the bias for tomorrow will be to the upside. If at all we see any fresh selling that is greater than the buying that happened here, then I will be updating that in live markets. But until then, the direction is towards the upside, and based on where we are opening, I would be picking up long trades. If we have a flat opening and start to move up, that would be a very good location for me to take a long trade with the 120 150 area as my reference. But let's say that we open with a 100 points gap up, then from a risk reward factor, it would not be an ideal zone, and I would rather wait for 18 150 to be taken out before I open any longs. So a major part of me trading the open today, open tomorrow will depend on the kind of opening we get. If I look at Bank Nifty, in case of Bank Nifty again, 40,100 and 150 is my higher time frame reference level. This move can extend from here till 40,100 to 150. To the downside, 39,550 to 39,635 is where this area is where the largest buyers are present. And until these buyers are holding ground, the bias would be towards the upside. And between 4100 and 39,635 right now, there aren't any valid references aspects as per volume analytics or order flow that we can use. So at this point of time, as I said, in line with Nifty, whether we are able to trade this move or not to 40,100 uh, depends to a large extent where we are opening. If we open, let's say at 40,000, it doesn't make sense to put on a long for 100 points trade with no viable location to place our stop losses as a day trader. To the downside, until 39,550 is broken, I would not be shorting Bank Nifty. The bare minimum is for 39,550 to be broken to see sellers getting more aggressive, because this is where the largest longs are present from today. The initial reference on an intraday basis was 39,500 to 540, but by closing we saw that 39,550 to 39,635 is where the largest uh, longs by big players are present. We need to wait for it to be broken before we can start to see any selling again. Now, talking about RSI, I hear a lot of people are stating that if RSI is above a particular number on a daily time frame, let's move on to daily charts. If RSI is is above a particular number on a daily time frame, then the market cannot go up any further, or there is a higher chance of correction. And right now the daily RSI is at 83. What you need to understand about relative strength index is that it's derived from the price movement, and the longer RSI is above your so-called overbought or oversold levels on a daily time frame, the 70 is called as your overbought level and 30 is called your oversold levels. And the longer RSI is above 70, which is overbought, and below 30 oversold, the stronger it is an indication of trend. Just because markets are overbought doesn't mean that they can fall. Since you are looking at this from a daily time frame perspective, you can see that even we breached 70 somewhere at this point in the beginning of August, and we are almost 600 points up, 700 points up in Nifty from that point. So don't rely on RSI as a contrarian indicator. It is mainly used for trend following purposes, and overbought is a strong indication of an uptrend, and being oversold is a strong indication of a downtrend. Rather, instead of expecting a pullback and shorting this market, you can rather wait for a pullback. If you don't have a long position, and I'm talking about positional traders, you can wait for a pullback whenever it occurs. You can't say, you cannot say when it will occur. I cannot say when it will occur unless we see sellers coming in. Whenever that occurs, uh, you can enter into a positional long on a daily time frame. That would be the ideal thing to do. And this is also applicable for divergences. If at all you begin to see, let's say market goes sideways, and you start seeing something called as RSI divergence, please note that a divergence is not an indication of a reversal. It is only an indication that the momentum in the current up move is lower than momentum in the previous up move, but it is not an indication of trend reversal. Trend will stay intact as long as price keeps moving up. It's only momentum that the trend would be lacking, and momentum can come in at any time. Taking reversal bets based on RSI also has certain rules that need to be followed. I have a 5 point pointer rule, which I look at if at all I want to take a positional reversal trade based on RSI. It's not blindly selling a market that is strongly continuing to move up. I hope this video is useful, folks. If yes, please make sure to like and subscribe to the channel. Also, I share my live market updates on Telegram. The link to the channel is given in the description below. You can join that. Thank you all, and see you tomorrow.